Welcome to our guide on understanding how alimony is calculated. Alimony, also known as spousal support, varies significantly by state or country due to differing laws and guidelines. That's why it's crucial to understand the basics and then look into the specifics of your location. We're going to cover everything from the purpose of alimony to the factors that determine how it's calculated. Let's get started. Alimony. It's about fairness. It's about making sure that after a divorce, both parties have a chance to stand on their own 2 feet. If one spouse sacrificed their career to raise children or support their partner, alimony can help bridge the gap while they re-enter the workforce or pursue further education. Now, alimony isn't one size fits all. Temporary alimony helps out while the divorce is ongoing, and rehabilitative alimony helps a spouse become self-supporting. Permanent alimony is usually awarded in long-term marriages where one spouse is unlikely to become financially independent. To figure out how much alimony should be paid, we need to see the financial picture, and I mean everything: income, expenses, assets, debts. We're talking about income, salary, investments, the whole 9 yards. Courts look at a whole bunch of factors when calculating alimony. How long were you married? What are your earning capacities? What lifestyle did you have during the marriage? It's about getting the full picture. Now, while there's no magic formula that spits out an exact alimony number, there are some common approaches. Some states use a percentage of income formula based on the length of the marriage. Others look at the needs of one spouse versus the other's ability to pay. It's all about finding a fair and reasonable amount. The duration of alimony can be a point of contention. Some states have a rule of thumb, say 1 year of alimony for every 3 to 5 years of marriage. Rehabilitative alimony ends when the recipient achieves financial independence. Permanent alimony usually lasts until remarriage or the death of either spouse. Alimony can have tax implications, and the rules have changed in recent years. It used to be that alimony payments were deductible for the payer and considered taxable income for the recipient. However, for divorce agreements executed after 2019, that's no longer the case. It's important to understand how these changes might affect you. Don't forget, every state has its own laws and resources. Some states have online alimony calculators or guidelines that can give you a rough estimate. Do your homework and check out what's available in your state. Listen, going to court should be a last resort. If you can, try to negotiate alimony terms as part of your divorce settlement. Mediation or collaborative divorce can be incredibly helpful in reaching a fair agreement that works for both parties. Even if you reach an agreement on your own, the court still needs to review and approve the alimony arrangement. They want to make sure it's fair, reasonable, and follows the laws of your state. So there you have it, a crash course on alimony. Check your state's divorce laws or consult your local court website for guidance on alimony calculations. Let me know if you need help finding tools or state-specific information. The more you understand about alimony, the better equipped you'll be to protect your interests and move forward with your life.